Welcome back to the Trading Bell Show. Thank you so much for your valued company. As I said earlier, we have the Banking Sector Report 2021 courtesy of Genghis Capital, and Danu Gatuguta was a team lead when it comes to that research, and she's here to help us understand, and as well we'll look at the markets analysis for the day. Danu, thank you so much for coming to the show. First of all, this is an amazing report that you have here on the sector, and you know, people are curious to know, first of all, paint for us a picture of the landscape in terms of the banking sector. What is the relative feel so far?
So currently the banking sector is looking quite good. The capital adequacy and the liquidity levels are quite strong.
Yeah.
So what banks did in 2020, they really increased their loan loss provisions.
Okay.
So that's what you saw eat into the profits. But now coming into this 2021, we have seen banks like Equity just recently released that they have reduced their loan loss provisions by 66%. And that's what boosted their earnings to up to 99% increase, which is quite commendable. So we'll see reduction of expenses, operating expenses, increase in government securities investments, and this is supposed to boost income.
Wow, certainly, especially coming from a season where I think most banks last year had it rough, but this year we are seeing some amazing reports coming out, and I think as late as yesterday we already seen some results coming out. I don't know what's causing all this that you've seen so far.
So, as I mentioned before, the cut in loan loss provisions, we've seen that banks have really reduced, like for example, Equity is using credit risk guarantees in place of provisions. We're going to see also banks are boosting up their capital. We've seen them getting loans from banks like the World Bank, IFC, and Africa Development Bank.
Excellent.
So this is going to boost up their capital levels as well. And also we're going to see net interest margins. Remember that there is structured loans, the interest had been suspended. Now that the window has closed, the interest now is supposed to come in and boost the levels of income.
Lovely. Let's talk about dividends, and the question should be, what should the investors expect now that you're talking about this bounce back that we've seen?
We expect that banks will start paying dividends again. Like, for example, we've seen Stanbic Bank. Recently, they announced that they're going to give an interim dividend of 1.7 shillings per share. So this is just a precursor of what's to come. Equity as well. In the AGM, they formalized their dividend policy to pay 30 to 50% of profit after tax. That should start at the end of this financial year. So as the earnings season continues, we're going to see more banks releasing their results. So we're hopeful that more dividends will be declared.
Lovely, certain very good news for investors there. And maybe the final question that I'll ask you is the risk factors that we see, and probably even the future that we see with this. Is this now a rebound completely? Are we good to go? Bright future ahead? I don't know.
Well, there are certain factors that will come in play. For example, the COVID-19 pandemic. We're still not out of the woods yet.
We're still in there.
Yes, we're still in there. And the vaccination efforts still need a bit of picking up because we haven't reached the levels for herd immunity. So that's one of the factors that, because restrictions might be reimposed if the numbers continue going up. So that's one major factor. The rest, let's say data security and data privacy risks. As well, we've seen now customers have moved to doing their transactions online, online banking platforms, and you can find you open accounts without even physical face-to-face interactions. So there's a possibility of account takeovers, identity fraud. So that's a part that the banking industry really needs to look at. Also, there's a shift in regulatory environment. We've seen that now, as Churchill had mentioned earlier, the 20% excess duty on loan fees and commissions. So that may force banks to pass the cost to the borrowers. Yes,
absolutely. All right, thank you so much for those comments on the research. And by the way, if you want to have a copy of it, visit Genghis Capital, all their handles, request for it, then you can have a keen look at the banking sector report for the 2021. Right about now, we jump into the markets analysis. All right, and part of the top movers and top gainers we are also seeing some banks as well in the numbers. You can see KCB Group, you can see Equity Group as well among the top gainers. And of course, in the top movers, Some of the top three there is KCB, Cooperative Bank, and Equity Group Holdings. Danu, before I leave you, since you are in the banking sector, I don't know what's your comment on this. These are good things that we see.
Yes, I would say that the banking sector, investors are quite bullish on these stocks because of the performance that we've seen. That's the recent banks that have released their results, and it's expected that this momentum will continue. So in the case of KCB and Equity, KCB had recently announced that they had plans to acquire two banks, one in Rwanda, that's Bank Popular, and in Tanzania, Bank ABC. So with these two acquisitions, when it comes to fruition, it will actually push the balance sheet to past the 1 trillion shilling mark.
Wow.
So that's one of the reasons why investors are really key on this stock. For equity as well, we saw the acquisition with the BCDC in Congo, and its loans and deposits have grown tremendously, and also its income. So with the increasing importance of subsidiaries with their contributions to the profits. So that is what is a few of the key drivers, as well as the digitization efforts.
Wow, lovely. Certainly very many things happening in the banking sector. Churchill, it's not that I am trying to throw you to the losing end, but I see some top losers here. We have Nairobi Business Ventures, Standard Group, Express Kenya, Uchumi Unga, but I'd like you to comment on one of it. Maybe the Nairobi Business Ventures is one of the top losers. What's happening?
Yes, we've seen some jittery, or rather some price gyration in that particular counter. It's one of the meme stocks. Remember in the US, there's this GameStop stock, which went all the way over the roof. So locally, we have NBV. At some point, it had a return of 1,000% from the lows that it was before it was suspended for trading. So a couple of things have come out in regards to Nairobi Business Ventures. They announced some acquisitions, and these acquisitions obviously will come at a cost. I think the figure that was put was 3 billion shillings. And then over and above the acquisitions, there's a plan that is supposed to be developed, 15 billion shillings. So I think the market is still digesting the viability or the whole strategy. Remember that Nairobi Business Ventures is started as a shoe retailer counter. Now it's pivoting to more or less like a conglomerate, be it in transport logistics, some cement factory, and also some aviation companies. So the whole strategy is still not yet been digested by the market, and that's what is reflected by the price. And lastly, also NBV was supposed to release its financials as at the end of July. It's been extended by end of this month. So probably when the financials are released is when you can see some glimmer into the where the company is going post the announcement of these acquisitions.
Now, Churchill, the NSE yesterday released a press release where it talked about the NSE market cap topping 2.9 trillion, certainly very good, and the all-share index is up by 3.84%. I don't know what you comment on that.
Yes, and what comes to mind is the Nairobi All-Share Index. That is a market cap weighted index, meaning that the biggest weighting to that index are those counters that have the biggest market cap. And what are we talking about? We are talking about Safaricom, which is above 65% share of the NSE all-share index. And then we have banks, another 20%. So based on that, and if there's any price movement in, say, Safaricom, you've seen Safaricom yesterday hitting an all-time high of 42 shillings and 90 cents. And other banks, be it KCB and Equity, which are now following Safaricom in terms of market capitalization, hitting 12 months highs in their prices. So obviously that will have a positive knock on the index. As they say, a rising tide lifts all the boats. But here the tide is Safaricom, KCB, Equity now lifting the whole index. So that's basically what it boils down to.
Thank you so much, Churchill, for that. Right about now, it's Markets 101. And on Markets 101, we want to look at the latest news that we have, that now you can buy shares using your Bonga points. Churchill, please expand for us a bit of this.
Basically, this deal that was announced by Safaricom and NSA, it allows Safaricom customers who have registered through the Bonga Points loyalty program, they can now be able to redeem their Bonga Points into NSA. Currently, the options of redeeming is either through making purchase of Safaricom products or even on Safaricom products, like redeeming it in a retail outlet. But a number of things come out in this whole Bonga Points. One is looking at the Bonga Points that are outstanding as per the statement that was given by Safaricom. It was announced it's 16 billion Bonga Points that are outstanding there. And then the conversion ratio is for every 5 Bonga Points you have is converted to 1 shilling. So 16 billion Bonga Points comes to 3.2 billion shillings. And you just spoke about the market capitalization as at yesterday. That was 2.9 trillion shilling. So the value that we are looking to be unlocked is around 0.1, at most 0.2% of the market cap as at yesterday. So that's a drop in the ocean. Yes. That's one. And then remember that these Bonga Points are earned by retail customers, you and me, and also corporate customers. So if you do the math, more likely than not, we'll see the people who are being targeted here are retail customers who are now watching us. Now they can be able to redeem their Bonga Points. So that's basically the crux of all what you're talking about.
But you certainly agree this is a game changer, and it has made it easy for people to think about shares, right?
It could be, it is an opportunity, but ideally it's an opportunity of, because this is money that is not, you do not earn, but how do you make good use of it? So that's where the opportunity lies.
All right, thanks a lot. That's the comment on the new Markets 101. I hope you have gotten something out of it. And, you know, never say you never know. Keep tuning in on the Trading Bell Show for more of this and for yourselves to keep tabs with what's happening in all matters markets. My name is Maina Shege. Thanks so much for your time. See you next time, same place, same time. Bye-bye.